So, if this is your first time seeing this channel, please subscribe. I'm a forex trader and I have 3 years of experience. I'm not yet profitable, but then I think I'm finding my footing in the forex industry. Now, what we have here is GBP USD, and I'm going to explain to you how I was able to use a simple SMC concept to catch a swing trader. I'm an intraday trader, but then right now I want to actually try swing trading. I don't know why, but I just kind of like feel like I want to do swing trading. Yes, so I think that's what I will be doing. So I was able to combine, the higher time frame perspective, and then I was able to catch this particular trade. Now the diagram I've drawn right here, if you have somebody who is trading SMC, I'm sure you will see this thing perfectly and you are going to spot it. But as a beginner, it might be difficult to spot this particular thing on the market. But let me just use this to explain the concept, and then after that we can head into the charts and then actually see whether we can spot it, right? So starting off, we need a break of structure, inducement, and order block to build what? An SMC concept. I think these are just the building bricks of what? The SMC concept, right? So we have the break of structure right here. You see market push down, but then couldn't push to the upside and then came and broke this particular structure. So we have break of structure right here. Then we can say this is our point of interest or where the order block is. So we can mark it this way and we are going to simply name it our order block. And this right here will be what? The inducement to trap early sellers and then come and chop them out of the market. And then now, so after market cleared this particular liquidity, then it will tap into your order block and then you are good to go. So we have our sell order waiting here. My stop loss is always right below. I take below the order block like this. When I get to the chart, I'm sure you are going to see what I mean. And I target what? This liquidity down here. And this is 1:4. Simple setup, very easy. This is not complicated. So you can only trade this particular simple SMC concept, but I'm sure most beginners are not going to always spot it on the market. I find it difficult when I started learning, but then I think these days it's a little bit, easy for me. Yeah. So let's get right into the chart. Let me explain to you how you can spot this particular simple concept right here on the chart. So I'm going to be using the Great British Pound versus the US dollar. So now looking at the Great British Pound, this is the weekly time frame. You see market first of all took to the upside, came, and there is another weak rejection from here, and then you see it's like market is kind of like just consolidating on the higher time frame. Now I zoom into the daily time frame and I see whether I can mark what? Some areas. Now mind you, if I say market is consolidating on the higher time frame, we are advised that we should stay away from from the sideways market, right? But then one thing that you can learn is that when market is consolidating on the higher time frame, it is a big move on the lower time frames like the 4 hour or the 1 hour, the 30 minutes, the 15 minutes. It's a big move. So starting right here, I think I can actually point out everything that I need right here from this particular chart right here. I can point out everything that I need here. I'm just going to go right ahead and mark them. So we have this. I always want to mark from the body to the opening wick like this, and I can say this is my what? Point of interest, or we can say order block. And then I can tell you that this is what? My break of structure, because look right here, this was the higher low before market broke structure to the upside, came back to that particular zone, but then couldn't continue to break structure to the upside. So everything this particular side is telling me that market is ready to push to the downside. You get it? And now I have my what? Break of structure to the downside. So we mark this as our break of structure to the downside. Remember, I don't enter trades on the daily time frame. I only mark the zones on the daily time frame. like this, like where I have marked and I'm expecting price to reverse. The reason why I'm expecting price, or why I'm treating this as an order block or a point of interest, let me put it that way, a point of interest to me is because market showed me that it's ready to push to the what downside. But before it will push to the downside, it will go back and gather liquidity before what going. So where is that point where it will gather the liquidity up to before pushing what to the downside? So I have thought it through, and then I see that this is the place what is going to actually tap on and go to the downside. Let's see if I'm right. So I will mark this as my inducement, right? And I'll explain to you why that side is my inducement. So you see, when market came to this place, it pushed what impulsively to the downside, which is what I'm expecting. So every seller is waiting here. Some sellers, the early sellers, are waiting here, and people are full of FOMO. So people are going to enter early trades or early sales here, thinking that it will go impulsively again to the downside. But what happens is market will just fake out, put them in some small profits, and then come back what to chop them out. So you see, market has come to chop them out at this particular level. And then when market chops them out, where does it tap on? Then it will tap on this particular POY. And as you can see on the daily time frame, we have this. But then I don't enter on the daily time frame. I enter on the 4 hour. So you can now zoom onto the 4 hour, and then your order would be here waiting. So you enter your trade right here. And something I forgot, let me go back to the daily time frame. All right, so where is my profit target? So my profit target is actually around here, it's down here. So my profit target is down here. Let me just put this thing here, right? Yeah, so that is where I'm always targeting. So I will drag this thing to this place. Remember, I said I'm a day trader, but I want to just switch to swing trading, and then I always put the stop loss a tick below, just like this. I'm done. And then we are currently floating in profit in GBP USD, and my expectation is that when market gets to this place, possibility that it will reverse and go to the downside, to the upside, is very high. But I'm not just going to enter blindly. I'm going to use certain confirmations like the change of character, the BOS, and then see if I can spot some opportunity here to continue buy from here, or to continue selling. If market happens to push through this place, I will be waiting for a retest on this particular red line, and then continue to short the market. Simple, very easy, not a complicated strategy, and I've been using it and it's working out. So you can also use it. Yeah, thanks, but don't forget to subscribe.